Good morning. It's Wednesday the 18th. This is what is on our agenda. UK inflation data hits the terminal right now. Christine Lagarde's undecided on her departure date, and Anthropic has a new model.
So we keep an eye, of course, on the pound and the lead up to the inflation data. Currently at 135, we had that softer wage inflation yesterday, and markets pulling forward bets that the Bank of England could go further with rate cuts potentially as soon as March. European futures pointing to gains of 0.2% after being close to record highs by the close yesterday, eking out further gains. The FTSE 100 had a very strong session, a fresh record high for that index yesterday of gains of 0.8%. S&P E-minis pointing up by 14 points. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade. It is Wednesday, the 18th of February. And, Tom, we start, just as you did yesterday, with some data out of the United Kingdom. Let's go to the CPI print, which just drops on the Bloomberg terminal this morning. So 3% is the year-on-year figure we have for the month of January, and that is entirely in line with estimates. The month-on-month figure, also in line with estimates, coming down by 0.5%. My eye is drawn, though, to a couple of areas where we have a number that looks higher than we'd anticipated. Core CPI is at 3.1%. That is a drop from the prior year, but it's higher than the survey of 3. And the services story, is that a little hawkish as well? Because that comes in at 4.4%, and that's higher than the 4.3% we had expected. So if I'm looking for reasons why the pound might be edging back towards the flat line, so unwinding some of its earlier weakness, then that could be it.
135 right now on the pound. We continue to monitor how markets price around the Bank of England. You have a 75% chance being priced in that the Bank of England does go with that rate cut in March. But to your point, if there is the concerns around stickiness, it will be the core piece of this inflation story, coming in lower than the previous print, but not by as much as had been expected. So 3.1%, the forecasts have been for 3%, to your point. And services inflation, we know when we speak to UK economists, that is the focus. That is a concern for the BOE. Services remain sticky at 4.4%. The survey had been for 4.3%. It is still on a downward trajectory. And the Bank of England and others are projecting that we ultimately get to headline inflation of 2% towards the second half of this year.
Yeah, absolutely. Bloomberg Economics talking about April being the month we get a 2.1% print, and that is partly because of all the regulated price changes that are going to drop out, that are going to be put in place as a result of the most recent budget into the UK economy. And it's interesting, we are seeing a little bit of movement higher on the pound, as if that services number and core number has given the market something to think about. But I wonder if that's enough to really change the direction of travel, which was set in train yesterday, which was around more cuts from the Bank of England, because the unemployment story in the UK does seem to be weakening a little bit, and certainly that was the story you were going through yesterday.
The other central banking focus for us today, the other currency pair as well, is euro-dollar, on the back of these reports from the Financial Times. We're talking about the ECB, we're talking about Christine Lagarde, who heads up, of course, the European Central Bank. Reports from the Financial Times that Christine Lagarde will be stepping down early from her post. That term ends October 2027. Importantly, there are French elections April of next year, 2027. The ECB have put out a statement saying that Christine Lagarde remains committed to her role, but this is a reminder that institutions and governments may be looking to shore up that institutional independence as we look at the electoral changes potentially in the cards for France and other nations.
Yeah, and you're right to point out the ECB has said Christine Lagarde remains totally focused on her mission and has not taken any decisions regarding the end of her term yet. So certainly no official announcement coming through from the ECB. But it is that interesting, that connection with the French elections. And we made this in some of our reporting just on Monday, I think, the Bloomberg News team talking about this, talking about how European governments might want to go into those conversations about finding her replacement before we get a new leadership over in France, and it is the French election, which takes place in April of next year, that seems to be front of mind when we're talking about this. And interesting to think how markets react here, because on the one hand, there's uncertainty, and we saw that meant a little bit of weakening of the euro. But if you think about who might take over, and who might take over a little more quickly, both of the names being mentioned a lot are more on the hawkish side, so that's Nagel and Schnabel. So if either of those take over, would that mean a stronger euro? So the market, with all of that in mind, not really moving very far on that particular
So those
story.
are the potential contenders for this role
and
at the head of the ECB.
I think there are others, but those are ones that have been mentioned a lot.
And what you can also do is draw the dots between the pressure that has been put on the Federal Reserve by the Trump administration and arguably, and this is the take from some, concerns in France, in Germany, that maybe similar pressure could be applied to the ECB if, for example, you get the National Rally coming through with a win in the elections in France. That remains, of course, a big question. You have a focus on the BOE as well, with Reform UK polling very strongly suggesting they want to see changes at the Bank of England. So you can draw the thread between the Fed, the ECB and the BOE on this story as well, arguably. Tech remains in focus for us today as well, Anna. Anthropic coming through with an update to one of its models, Claude Sonnet 4.6. What this allows you to do, apparently, is put this onto your computer, Anna, and it can carry out more tasks for you. It can jump between different tabs. It can fill in forms on web services. It can book your restaurants and your flights.
Catches my attention.
Yeah, so there you go. So that's so if you want to hand off more of your work and hand it over to the AI agents. This really is the year of the AI agents. We've kind of talked about that in 2025, but it's really actually coming to play in 2026. OpenClaw over in the US, San Francisco, and tech enthusiasts there are just going with kind of bananas over OpenClaw to the point where the CEO, in fact, has been now hired by OpenAI. The point is, AI agents, the amount of work it's taking on at an individual level, but also at a corporate level as well. And we've seen that ripple through the markets.
Yeah, absolutely. And yesterday was another example of a market that looked flat on the surface, but, we've got ducks paddling frantically beneath the surface, perhaps. All kinds of rotations taking place, that software out of software into other parts of tech, very much part of the narrative. And the example of this yesterday that really caught my eye was Raspberry Pi, which is a really small company here in the UK. We associate with hobbyists and primary school pupils and their parents building computers at home. Really small cap company and not really, you wouldn't ever describe it necessarily at the sort of bleeding edge of technology. But suddenly this kind of hardware could be desirable if you've got agents running on computers and you don't want that agent on your sort of main computer where you've got lots of sensitive information. You buy some cheap hardware to run an agent on another platform, and that's why we saw the share price of Raspberry Pi up by 43%.
So that's the bull case.
Yesterday.
That's the bull case for Raspberry Pi. The bear case is that the memory cost is going to be a constraint on margins for this company because of the chip squeeze that we're seeing in terms of the memory story. One of the gainers in that story has been SanDisk. In fact, it's the best performing stock on the S&P 500 year to date. It's seen gains of about 150%. There's a story that came through in terms of Western Digital, which spun out the business and is looking at reducing its stake in SanDisk to raise about $3 billion US. So what you read into that, I'll leave to you. But I think it's interesting, given that SanDisk has been one of the biggest beneficiaries of that focus on memory chips and storage devices, and now Western Digital looking to pair its exposure to that business.
Lots of tech themes then this morning. Another big investment theme we've talked about a lot on this programme is around defence. So let's go to the numbers from BAE. We have BAE numbers just dropping onto the Bloomberg terminal right now. The numbers don't look a million miles away from estimates. They are giving us their guidance for 2026 for the business as well. So in terms of the backward-looking numbers, the underlying EPS comes in pretty much in line, 75.2 pence. That's against an estimate of 75.1, so just a tiny bit ahead of that. Underlying EBIT also comes in, well, actually, that comes in a little ahead of estimates, and the sales number for the full year looks to be broadly in line. As far as the guidance is concerned, they are looking at sales of 7 to 9% for 2026. That's an increase in sales, of course, and talking about underlying EPS increasing by 9 to 11%. We'll see how that goes down with investors in around 52 minutes when these markets open up. We're also looking for any commentary that they might have to give around Doge and the review that we've seen by Doge into some of their buying of cyber and intelligence services, because that had been something that Morgan Stanley had flagged as an area where we might see weakness coming through in this particular business. But that's the BAE story.
To the mining space now, and this is just less than 2 weeks, and this is Glencore. Less than 2 weeks, of course, after those talks with Rio Tinto broke down. So interesting in that context as well. We know investors are going to be tuning in for commentary from executives around the nature of the breakdown of that deal and what it means, particularly for the return of cash and to shareholders. Glencore full-year adjusted EBIT coming in at $13.5 billion US, so above the estimates of $13.2 billion. They're recommending a cash distribution of about 800 million, so just shy of $1 billion in terms of the cash distribution, and it is looking like the coal part of the business has come in a little softer and is maybe offsetting some of the gains coming through from the copper rally for Glencore. Debt, we know, is in focus as well for investors, and that is coming in slightly lower in terms of full-year net debt, slightly lower than the estimates at just shy of $11.2 billion US. The estimates had been for $14.4 billion. So the debt metric on that score, at least, looking slightly healthier. But again, full-year adjusted EBITDA coming in above the estimates for Glencore full year, that is.
OK, we'll watch that one at the open as well. Let's tell you about some of the guest conversations we have coming up on the programme today. We're going to be speaking to Modupe Adegbembo, economist at Jefferies. Great to get a perspective on the UK growth story, given what we've heard this week about wages, unemployment and inflation. Jeremy Stretch will be with us, a chief international strategist at CIBC. Great voice to have on when we're watching the euro. How should it respond to all these mixed headlines and mixed messages, I suppose, around Christine Lagarde and her intention to commit to a date to leave the ECB? We'll also talk to Sophie Wynne from BNP Paribas Asset Management. That'll be around the market open. So more focus, no doubt, on the software selling that we have seen of late. And we'll also speak to Ilkka Paananen, who is the Supercell CEO. To what extent are AI themes an opportunity or a threat when it comes to game design? We'll be talking about that a little bit later on in the programme. Talking of AI...
Here's what else to think about through this day then. India, AI impact, that is taking place. Really significant event with that focus, as Anna was saying, on AI. That summit is taking place in Delhi with France's Macron continuing his visit to India as well. We're getting some key voices on the back of that AI impact summit over in India. There's also talks continuing between Ukraine and Russia, and those conversations continue in Geneva today. So we'll monitor those for you. And Euronext is set to report results after the market, and at 8:30 a.m. UK time, the Bank of France Governor François Valery de Gallo will be speaking in the French National Assembly. Interesting, given that he has said he will be stepping down from his role early. And at 7 p.m. UK time, we're going to get Fed minutes. We heard from some Fed speakers overnight talking about the AI impact on productivity and how that may actually leave a slightly higher neutral rate as well. So we'll be watching out for the minutes and see if there's any more colour in there as we continue to debate what kind of Kevin Walsh turns up at the Fed.
Yeah, and the extent to which we've had central banks really engage and reflect on AI is interesting, and no doubt one we'll pick up later on in the programme. Let us talk a little about some of the other stories that are in focus this morning. Japan plans to invest up to $36 billion in US oil, gas and critical mineral projects, the first tranche of its $550 billion commitment under the trade agreement that it struck with President Trump. Japanese Prime Minister Sanae Takaichi said the projects were designed to build resilient supply chains in areas crucial for economic security, including critical minerals, energy and AI. Tom was alluding to this story earlier on. Reform UK's new Treasury spokesman, Robert Jenrick, is set to say the party plans to overhaul the Bank of England and the government's budget watchdog if it wins power. The BOE would be, quote, stripped of ancillary responsibilities such as net zero so that it can focus on keeping inflation down. Meanwhile, the Office for Budget Responsibility, or OBR, will be required to include more, quote, diversity of opinion when making forecasts for the UK economy. And the US and Iran have hailed progress in nuclear talks in Geneva, with Tehran's negotiators scheduled to return with a new proposal in 2 weeks' time. Iran says it has reached what it described as a, quote, general agreement with the US on the terms of a potential nuclear deal that would lift sanctions on Tehran and ease the risk of a broader war in the Middle East. And Tom, we've seen, Geneva has been the epicenter of a lot of conversations of late. So the Ukraine conversations, the Iran conversations all taking place in Geneva. We get another day of the Ukraine conversation. But the Iran story, interesting, it played out in markets for the last 24 hours. We saw a real drop in the oil price on the back of these seemingly quite positive statements from both sides about progress being made, and the US saying talks will continue in 2 weeks. And all of that coming despite the fact that the Iranians said they were going to shut a part of the Straits of Hormuz for drills, for military drills, just as a bit of a reminder of where their head might be.
And you can see that volatility in the oil price over a 2 and 3 day period as well. It got close to $70 a barrel, and then that sharp drop off when both sides came out and commented on the talk. So we now have a 2 week period, it seems, before they get back to those negotiating tables. But the Straits of Hormuz was in focus yesterday, and that has always been the concern. That is the essential kind of nuclear option for Iran, is closing the Straits of Hormuz. They haven't done that before. The supply of oil has continued. But that remains a threat, at least the Iranians want to be putting on the table. Interestingly as well, we've seen additional US military assets moving into the region as well. So the US are not walking back from having military options on the table.
Yes.
But both sides seeming to suggest that they did see some progress in these talks.
Absolutely. The US sending a second aircraft carrier to the region, haven't they, which has put a lot of focus on what the US is prepared to do. I was at an oil event last week, International Energy Week, taking place in London last week, and there were quite adamant voices saying, look, the US US isn't going to do anything. This is ahead of the midterms. They're not going to do anything that risks pushing oil prices up further. But that wasn't everybody of that view, but that certainly was a sort of calendar date that those in the oil market thought was important to keep in mind. Still to come on the programme, Warren Buffett slashes his stake in Amazon by more than 75%. We'll have more on what he's buying instead. Plus, is the gaming industry next in line for AI disruption? We'll be speaking to the CEO of Supercell, the company behind Heyday and Clash of Clans. Up next, we will discuss what this morning's UK inflation data might mean for the Bank of England's next rate decision. How live is that March meeting? And if you have any questions, if you want to get involved in these conversations, IB plus BBTV Go. That's the function to use on the Bloomberg terminal. This is Bloomberg.
Right, let's turn back to the UK CPI story and inflation dropping to its lowest level since March, bolstering the case for an interest rate cut when the Bank of England meets next month. Some components, though, stickier than the forecasts. Let's bring in Modupe Agedembo, economist at Jefferies. Modupe, always great to get your insights. Does the UK still have an inflation problem?
So I do think there are still fears around inflation persistence, but I think you can also say that we're not as worried as we were maybe 3 to 6 months ago. Even looking at the inflation numbers for services, they are still around 4%. So they're high, but they're nowhere near the kind of 5-6% they were a few months ago. So I think those fears are coming down. And the fact that we know that inflation is going to come towards 2% as well in April also gives us some comfort that, you know, inflation expectations and some of these other elements that may have been more worrying are also coming down.
So to be clear, none of the data today derails your view that we get to 2%?
No.
And you think that happens by April?
Yeah. So I see that happening by April. So our exact forecast is 2.1% for April. And of course, a lot of what is doing the heavy lifting is government policy and the fact that base effects that were price rises last year are dropping out of the annual comparison, but nonetheless bringing prices back towards target.
OK, good morning to you, Modupe. So we're getting easier comparisons and we're getting the government basically mechanically bringing inflation down in some places, aren't we? And you expect 75 basis points of cuts in 2026. I think the market is expecting 50. So what is it that you see that allows the Bank of England more space to cut this year?
Yeah, I think it's coming from two main sources. So the first is that we expect growth to be weaker than markets are currently seeing them. Actually, when you look at what the OBR are expecting for the UK growth, it's around 1.5% for the next couple of years. We think it's a lot closer to 1% and actually probably is slightly lower in that sense. So we think growth is weaker than expected. But the second factor is that we think looking at the labour market conditions are not doing well right now. We saw unemployment move to a 5-year high and youth unemployment is at a 10-year high. So all of those metrics are not looking good. And the forward-looking metrics as well. So, for example, looking at redundancies, are also not great. So that's telling us that we see more adjustment in the labour market and we see more slack emerging as well.
Yeah. Lingering on that unemployment point for a moment, Modupe, I was really struck by, yes, the youth unemployment story in the UK, because up to this point, a lot of people had said, well, look, it's kind of similar to what's going on in the States. It's not that different and it isn't that surprising, I suppose. Now we have UK youth unemployment going higher in percentage terms than the EU level for the first time. This is the male chart we have here. If you add in the female chart, then you get that pattern I described. I mean, what does that... how worrying is that at the youth end of the unemployment story? I mean, how much of this is cyclical and attached to the budget that we saw recently, perhaps, or attached to AI? Is it easy to pin reasons onto this?
I think it's difficult to pin kind of exact reasons, but one of the things that I do think is interesting is when you compare the EU to the UK, that's where maybe we can start to pull out some of the cyclical reasons, some of the reasons that may not be as structural. And I think there you can actually see that some of the increases in NICs and national living wage as well are having an impact. The fact that it's more expensive to hire younger workers is having an impact on the choices that businesses are making.
Do you think that's a bigger impact, the increase in national insurance contributions, than AI?
So I think at this stage, my view would be that would be a bigger impact, just because this has been coming. When you look through the data, you can see the uptrend in youth unemployment has already started kind of before a lot of the discussions around AI have began. I think the risk from AI is that we see an acceleration because it's a trend that would definitely continue to weigh on the labour market, especially.
So the view from this current government was that because of the size of the services economy of the UK, that if you embed AI, you boost productivity and you're going to lift output. Is there also risk, because we're so reliant on services, that actually we're more vulnerable to that AI disruption and job losses? I guess my question is, if we look at your view in 2027, someone sat down and asked you, what is the labour market going to look like as a result of AI? How vulnerable are we to significant job losses?
So I would maybe more subscribe to the case where you were talking about the fact that having a big services economy actually leaves us exposed. It leaves us vulnerable, because when we look at technology adoption in historic waves, we see that there's a lot of disruption that occurs as that technology is embedded. So it may be a situation where actually output is a lot higher in 5 or 10 years' time, but that is the kind of long term. And for policymakers, they have to be looking at those changes and how that policy is embedded in the way that companies work. And I think that could cause a lot of disruption, and having a lot of services makes us vulnerable.
And Modupe, how should central bankers think about that? I mean, it's in the US case, they have a dual mandate, but the labour market mandate is supposed to dominate, isn't it, if they come into tension. But the UK just has an inflation mandate. I mean, if we start to see, generally speaking, lots of investment, lots of capex still happening, but unemployment starting to rise and labour markets retreating, there's going to be a period where these goals are sort of diverging, aren't they?
Yeah.
Is that going to be a story for 2026, or is that later on?
I think that could absolutely be a question. I still think that the Bank of England and the ECB, even within their mandates, they still have an important role to play, because when I think about the labour market, it is one of the key drivers of inflation anyway. So if we see a situation where, you see a lot of unemployment or more slack in the labour market, I would expect to see the Bank of England, for example, to respond, because later down the line that would bring lower inflation. So I do think that is already kind of embedded in the inflation target.
Yes.
But having a more explicit kind of focus on it, I think, is important, and that may be a conversation that comes later down the line.
We've been wrestling with this idea of what the markets day in day out are concerned about what AI does to various software companies or various white collar jobs, and with that you start to think, well, how can the consumer globally hold up if jobs are going to go as a result of AI? But I mean, the sequencing of all of these things and the duration, the time it takes to deliver these changes seems very opaque.
No, absolutely. And I think that's what we're all kind of wrestling with at the moment. And you can see there's so many diverse views on exactly what AI will do to the labour market, on all of the timings. So I think it makes it really, really uncertain. But also, I guess, coming from a policymaker's perspective, they really need to think about these risks. These are risks that they need to be considering and thinking about in their decision making as well.
OK. Modupe, thank you very much. Thanks for joining us. Modupe Adebembo, economist at Jefferies. And we've spent so much time thinking about the day in, day out market moves around AI, Tom, that, the next step is how will policymakers respond? What will populations around the world say if this starts to threaten jobs? And what will that do to economies? But it feels as if things are very difficult to predict right now. Yeah,
and to what extent you can get a forecast out to even the end of 2026, which isn't going to be derailed by the disruption coming through from AI. Really interesting that Modupe has 3 cuts from the Bank of England, so getting down to 3% by the end of this year, and really pointing to the softness in the labour market. So 3%, and we'll see if markets adjust to that. We saw a pretty decent rally in gilts yesterday on the back of the softer wage data and the softer labour number, 5.2% unemployment. So we'll see how gilts react again to the CPI number.
Yeah, I wonder whether that's why we got that spike up in the pound, because the market had been sort of positioned yesterday for something more dovish, and we got pretty in-line inflation numbers, didn't we? But there were areas of hawkishness you could find if you wanted to.
We'll get another angle on a different central bank, because coming up, the ECB is denying a report that Christine Lagarde is to step down as president before the end of her 8-year term. We're going to speak with CIBC's Jeremy Stretch, the impacts on the euro, and we'll get his views on other currency crosses as well. Stay with us. This is Bloomberg.
Welcome back, everybody. This is the opening trade, Wednesday, the 18th of February. European equity markets then half an hour from the start of our trading day. European equity markets looking to gain just a little at the start of the trading day, up by 0.2%. US futures also pointing a little bit higher, Tom. And, I mean, we're short of participants, perhaps, in these markets right now. The US was on holiday on Monday. Yep. It's Lunar New Year. Lots of parts of the world over in Asia have no market trading. So
the activity in the bond markets yesterday was all in the JGBs. There's less of that today. We're seeing very modest moves in terms of the sovereign debt of Europe. So the German 10-year Bund is yielding 2.74. Yields are up just 1 basis point. Over in France, the OAT is at 3.32, largely unchanged, as you can see. BTP's at 3.35. We're going to be watching gilts, of course, at the open at 8 a.m. UK time. There's a pretty decent move into gilts yesterday, with yields coming down on the back of that softer wage data. We'll see how the CPI numbers impact gilts, but so far largely unmoved in terms of the sovereign debt of the Eurozone.
OK, which is interesting in the context of the next story. The Financial Times is reporting that Christine Lagarde is expected to leave the ECB before her 8-year term as president expires in October of next year. The ECB, though, says that Christine Lagarde is totally focused on her mission and has not taken any decision regarding the end of her term. Joining us now to think about what this might or might not mean for the euro, Jeremy Stretch, Chief International Strategist at CIBC, and somebody we turn to on currencies often. Jeremy, good morning. Nice to have you with us. So it seems as if she might or might not have decided if she's going early, and we can get to the reasons for that perhaps. But how should the market think about this story? What should be in the market's minds when it's thinking about the uncertainty created here and who the likely replacements would be?
Well, there is a lot of transition due to happen and at the top of the ECB over the course of the next 18 months in any case. So the market knew that. But in a sense, it's also trying to understand how that transition will change the potential narrative in terms of the policy reaction function. So when you think about Lagarde, when you think about Philip Lane, the chief economist, when you think about the transition that we're seeing in terms of the vice president with Mr. Vucic coming in from the beginning of June. So it feels as though the ECB may be having a slightly more hawkish bias to it over the course of the medium run. So that would be one factor which would be euro supportive. But clearly these stories about the tenure about Madame Lagarde could create a little bit of instability. Now, of course, the ECB are always going to say that she's inherently focused on her job today, tomorrow, next week. But, of course, this speculation, which isn't the first time this has swirled around, is going to persist. And I suspect she will continue to face these sort of questions on a perennial basis until he eventually addresses it and says whether she is actually going to serve until the culmination of her term in October next year.
Yeah, it's interesting. When this story from the FT dropped, we saw a little bit of volatility around the euro, but not too much. And then as the closer we get to the European trading day, the more this has been traded as a sort of euro negative story. So we'd see the euro dropping, not by a huge amount, but just taking another leg down on this story around 7 o'clock UK time. There's other things in the mix. We've got UK data out, of course, as well, and the yen on the move. But do you think this? I mean, should this actually be a hawkish story then for the euro?
I think possibly yes. So you get the first order derivative of uncertainty. Then immediately, if you're an international investor, you don't necessarily understand the mechanics of the ECB. You say, well, the speculation about the ECB leadership, I want to sell the euro. So you may just lighten up your positioning. Then when you take a step back, all those more reasoned observers coming in, as we start to see the European session, those that are mindful of the transitional basis of the ECB regime in any case, and you start to think about the logistics of a potential more hawkish perspective over the medium run, then that provides perhaps a little bit of resilience and balance. So it is the case that I don't think we're going to be seeing the euro running through some significant levels of support in the near term. And indeed, I think you probably see some investors looking at any dips as a potential buying opportunity.
Jeremy, how are you thinking about the fact that this is also a sign for some that these institutions have been backstopped by governments ahead of a populist rise in France, in the UK, the pressure on the Fed over in the US from the Trump administration, and the ripple effects that's now having to other major central banks?
Absolutely. I mean, independence of monetary policy is a central tenet of the broader international financial architecture. And that is and has been perceived to be threatened, obviously in the context of the US. And as we go towards those French elections next year, where there is obviously a residual risk that National Rally could be successful, and that would obviously have an implication in terms of the transition not only at the Banque de France but also in terms of the ECB, it makes sense for some of those policymakers who are mindful of those issues to perhaps get ahead of that and allow the current regimes, from a political standpoint, take the decisions about the replacements for Lagarde and others in order to facilitate that sort of independence narrative.
Is independence a real, even if it's a small risk, is that there for both the ECB and the BOE then, given what Reform UK are they're saying about changing the mandate.
Well, indeed, it is very much the case that I think independence is now on the docket for investors to consider as a potential residual risk. Not a major one, but it is something which is a sort of an existential risk that you have to be mindful of. So it is something that I think will become more pertinent, more relevant. So in the context of Reform UK and the potential changes to the Bank of England, as we get close to an election and depending on how the opinion polls play out, then that issue may become more pertinent. Now, of course, political uncertainty generally is negative for sterling, generally negative against the dollar, but I think it may be more so against the euro in this particular context because of the dollar uncertainties themselves. But if we do get close to that election and we do see some debate about the mandate of the Bank of England being changed, then inevitably that would be potentially another hurdle for sterling to overcome.
Yeah, I mean, Jeremy, just on that reform story, so they're expected to say today that the Bank of England will be stripped of ancillary responsibilities. This is around net zero, and wanting to introduce more diversity of opinions into the forecast. So this feels a little bit like, Myron coming in at the Fed, having different views around the table. But they do say that the Bank of England and the OBR will remain independent under a reform government. So that is the line coming from reform. I mean, the diversity of opinions argument, do you get the sense that there are views that are missing from the Bank of England current lineup? Are there those that you hear from in markets who are saying, actually, rates should be a lot lower than they are right now?
Well, I think what I would say is when you consider that we've had 3 consecutive meetings where there's been a 5-4 split vote. So I think we've got a diversity of opinions already on the committee. We already have people from different nationalities sitting on the committee and have done for a considerable period. Now, you contrast that with the Fed. When you do get dissensions, that is quite big news.
It's quite unusual, isn't it? Whereas in the UK, it's quite...
So in a sense, the Monetary Policy Committee of the UK have been set up with an ideal that having a diversity of opinion is an integral matter. We have seen on occasions the governor also outvoted. So again, that's not unprecedented. So to suggest that you need to have a broader range of opinions, I think is somewhat disingenuous. It possibly implies that you want to have those opinions that are slightly more aligned to your own political views. So obviously the imposition or the presumption might be that, going back to the Merz argument, that you want somebody who is of your political persuasion, so who would do your potential political bidding, which again comes back to that independence argument. So I think there's a nuance to this which I think is quite important to understand.
Our previous guest, I want to get your views on the BOE on the back of the data that we've seen this week. Our previous guest saying that we could get down to 3% by the end of this year. Do you align with that view, or are markets going...
On UK rates.
Oh, sorry, on UK rates, to be clear. On
Not
UK
inflation, because we just got there, just about.
Thank you, Anna. The BOE can cut 75 basis points this year, starting in March. The labour market has seen that slack. The BOE has that scope. Do you agree?
I think they cut in March, yes. So we've long anticipated that they would cut in March. So even when we were only pricing in less than 5 basis points, we thought there was still a residual risk that they cut in March. So we still hold on to that view. I would be slightly different in terms of my interpretation of how much further the Bank of England go from there, because I think there is still that persistence of inflation. So even though we're getting headline inflation coming down, I think there is still a persistence of inflation in the UK. Yes, the labour market is softening, but I think the sort of the terminal rate in the UK is possibly that bit a little bit higher than 3%. So I think the bank will be keen to get to 3.5. I think then they will have a period of watching and waiting to see how the economy reacts beyond that. And so the negative views in terms of the growth presumption, which I think are consistent with that 3% target that your previous guest was talking about, I'm not so sure that the growth backdrop is going to be quite that weak. So if we're closer to those OBR numbers of nearer 1.5%, I don't think the Bank of England needs and will require policy to go anything like that sort of 3% threshold. So I think we have an earlier move, but I don't think we see a rate profile that goes as low as that. And I think that's a very similar view that we have in the US as well. Early moves, but you don't necessarily see terminal rates quite as low as the market is anticipating or fearing.
Really interesting. Moving on, and for the last question, before we focus on... Let's move on from the UK and the ECB. I want to get your views on what other FX cross or what other currency is looking mispriced to you at this point, Jeremy.
Well, I think we've been looking at things like Scandinavia, so in terms of Sweden, so that's a cross that we particularly like. Sterling, I think, is still one which is troubling to us because both the political risk and all the near-term rate story and the near-term dynamic. So I think you look at sterling, but away from some of those traditional crosses, whether it be cable, whether it be euro sterling. So I think something like sterling Aussie is also a cross that I think is particularly interesting, even though it's moved a long way. I think when you're looking at Australia with its both monetary policy tightening and its sort of metals backdrop, I think that looks quite interesting, even at current levels relative to sterling.
OK, so you buy Aussie sterling. So you buy Aussie versus sterling. Aussie's going to go up because rates are going up. They're benefiting from commodities.
Yeah, so sterling Aussie is going down.
Yeah, sterling Aussie is going down. All right, Jeremy Stretch, thank you very much indeed. Chief International Strategist at CIBC. Coming up, Glencore reporting adjusted EBITDA for the full year that beat the average analyst estimate. More on that and your other stocks to watch. That is next. This is Bloomberg.
Welcome back. This is the opening trade, 7:44 here in London, which means 16 minutes until the start of cash equity trading. And we are expecting a little bit of a drift higher for stocks. Low volumes, though, could be a theme, given we have a lot of the world out for the Lunar New Year holiday, and the US was out on Monday, of course. So slightly lower volumes than usual this week, certainly anticipated. With that in mind, let's think about where we are on the AI theme. Global leaders and key tech players are attending a high-profile AI summit in New Delhi, hosted by India's Prime Minister. This as traders struggle to respond to the volatile impacts of AI. Bank of America President of International, that's Bernie Merz, spoke to Bloomberg's Oliver Crook about the rate of change in the industry.
It's an area that's moving and evolving fast, and sometimes I think about it like a watch: minutes hand, second hand, hour hand, and you need to sort of calibrate to all of that. I'm focused on the minute and the hour hand, and just making sure that we're anticipating where we think that the puck is headed with respect to AI.
And thinking about that minute, second hand, we've been talking about the SaaS apocalypse, the Ramageddon. Where do you see kind of the biggest dislocations within the sort of different industries? Again, it seems almost every single day we get a new story on this. I mean, here in Europe, we keep hearing from investors that Europe is sort of a hedge against some of the top-tier AI trades. But again, some of the industrial companies getting hammered this week in the form of Dassault and Siemens.
Yeah, I think that analogy perhaps pertains, i.e., a lot of that is the second hand, and I'm not saying we should ignore it because it reflects, perhaps the medium-term trends around these things. But whipsawing from sector to sector, day to day, is a tough thing to follow. I think most really active market participants are thinking more in the sort of medium term as to, how might these things, deploy meaningfully. I think we're all on that learning curve, and that discovery is taking place. It's taking place live in the markets, and that's where we're seeing some of that price action.
Bank of America President of International, Bernie Merz, speaking to Bloomberg's Oliver Crook this morning. Let's bring in Bloomberg's Adam Linton right now. And we'll start on the US equity story. And Anna was pointing out that volumes are going to be thin. We're getting some updates in terms of the AI story. Anthropic coming through with a new model. European stocks not far off record highs. The FTSE 100 had a really decent session. Fresh record high yesterday. What are you looking at in terms of what the impulses are going to be for the equity markets today?
Yeah, so, the price action we saw yesterday was incredibly whipsawy. I think on an intraday basis, it's pretty difficult tape to read. But I think, what we've been talking about throughout the week very much remains in place. There's a lot of concern about the AI trade. What is this large capex spending going to result in? And what are the displacement effects we're going to see in industry, and who's going to get caught in the crosshairs? So, when cyclical growth is relatively strong, a lot of these cyclical companies, people are happy just to head into those and, avoid this kind of AI theme. And then from a regional perspective, like I said earlier in the week, Europe's previous weakness, its lack of exposure to IT, is now acting as a strength, and it's been a source of attracting flows. And like you mentioned, the FTSE as well, that's another good index. It has that cyclical, that commodity exposure, a strong financial sector. And so I think until clarity on the AI displacement effect is resolved, I think we'll continue to see more of this trend.
OK, so AI displacement, that rotation, the sort of software stocks coming under pressure continues to be a theme then, Adam. What do we do? What do central bankers do? They've been kind of quiet, it seems, on the AI theme and what this does to underlying economies. But I know we've been hearing from the RBNZ. We were speaking to a guest just moments ago who was telling us that they thought, despite what the market did with the Lagarde story, that actually this could be hawkish for the euro. I mean, what's your thinking about global central banks right now?
I think ultimately we have kind of seen a bit of a dovish inflection point since the start of the year. You take something like the Bank of Canada, the ECB, they were biased towards potentially hiking at the start of the year. That's gone away. For the Fed, the conversation has gone, from 1 to 2 cuts this year to 2 to 3. And I think, we have potentially overshot a little bit there. As you said, the AI theme is incredibly important for central bankers. And we actually saw from Fed's Barr yesterday that he was actually, a little bit more cautious than, Kevin Warsh is expected to be, which suggests that, Kevin Warsh may struggle to get the Fed on board with kind of some of his views. But, there's been a bit, at the margin, some other dovish impulses. Bank of England, that's increasingly dovish. And, going back to the ECB, I saw this Lagarde story this morning, and my kind of take is it's not really a tradable event at the moment. We don't know who could take over. We could be a dove, it could be a hawk, and then even when they are in place, we don't know how much of an effect they're going to have on monetary policy. So, yes, it's an interesting headline, but for a tradable event, I don't think it's really that important at the moment.
Is the BOE still tradable? Does the CPI of today change your calculus in terms of how far and how fast the Bank of England can go?
I think it just validates what we were talking about yesterday. CPI, all it had to do was really print in line. Yes, it's a bit above the Bank of England's expectations, but ultimately it plays this narrative that disinflation process is on track. Yesterday's labour market data set us up for a March cut. The bar to do that already was relatively low. I don't think anything we've really seen in the data has really kind of changed that view. I think, we do get this second cut in 2026, but I think it may come slightly towards the end of the year. I still think there's a bit of reticence on the MPC, and that could potentially keep pound pressured in the interim. If you combine that with political risk as well, I think that'll be incredibly thematic for the pound.
OK, thank you very much, Adam. Good to get your perspective. Thanks for joining us on the programme. Adam Linton from the Markets Live team. And remember, you can get the thoughts of the full Markets Live team by going to MLIV Go on your terminal. Let's get an update on the stocks to watch. Here's Chloe Melly. Good morning, Chloe.
Good morning, Anna. Let's keep an eye on Glencore today after it reported a drop in full-year profit. And that is because the massive rally in copper prices that we've seen recently was just not enough to offset some weakness elsewhere, and especially in the struggling coal operations. And this comes just a couple of weeks after the deal talks between Glencore and Rio Tinto collapsed. And so this really puts pressure now on Glencore to show investors that it can unlock that value alone. And so we could see this impact there on the shares this morning. Moving on to Carrefour, and there we've got earnings that came in last night. We've got a miss on profit, but then the sales actually did a little bit better over the fourth quarter. And so it also has a capital markets day today, where it is expected to update investors on a strategy to refocus on core markets and shrink operations elsewhere. And Bloomberg Intelligence analysts have said that the dividend increase and this boost in sales could potentially offset this miss on profit and raise expectations for the capital markets day. But we'll see how investors actually react to those earnings later at the open. And finally, Unilever is also in focus after receiving its second downgrade in 2 days. Yesterday, we had Kepler Cheuvreux downgrading the stock, saying that there was better value elsewhere. And today we've got Berenberg saying that the transformation plan is now complete and therefore there's nowhere else really for the shares to go. And so we've seen Unilever start to outperform its peers recently, but this back-to-back downgrades, that could potentially lead to a little bit of weakness for that company this morning.
Primrose Chloe Melly on some of the stocks to watch. Chloe, thank you very much indeed. This is one of Anna Edwards' favourites of the day, at least, is Raspberry Pi, because it had a storming session yesterday. It's called higher again. Gains of almost 40% yesterday, and it's called higher again today. This is the UK computer maker, normally for hobbyists, but now maybe with another huge set of demand coming through. That's the expectation. That's the hope, at least, from some.
Absolutely. With the agents in focus, this just tells you about the rush into hardware that we're seeing, doesn't it? Because from really unexpected corners. Now, it doesn't mean that it's got up to its highest share price, which was in 2024. It doesn't mean it's got to £1 billion in market cap either. But it is just quite fascinating the way that the fallout from the AI story and what it does to those companies that could either be threatened or see advantages from AI. It's just really difficult to call, isn't it? And this is a business that people are saying, if you've got an agent and you're not sure if it's going to be, you want it on your computer, but you don't know if you want it on everything on your computer, then you buy a cheap computer and you put the agent on there.
Yes.
And then it can book your restaurants and it can organise your diary and do all the other things you want your agent to do. And that's the reason that you might want to buy a Raspberry Pi.
Yeah, and the competition seems to be between the Apple Mini and the Raspberry Pi. And this is a UK-listed tech hardware company. There we go. And to your point, this is around storing some of those OpenClaw, for example, OpenClaw bots on the Raspberry Pi for security reasons. And so we'll see if that demand really propels and is sustainable for Raspberry Pi. The challenge for this company is how they contend with higher input costs and things like memory chips.
Yeah, absolutely. And you mentioned earlier on, this has been a big thing. So on the cost side, maybe things more challenging, but the stock was up by 43%. At one stage yesterday, I think it was up by 36, was it, by the close?
Yep.
But again, it could be higher this morning on the back of news flow there. We'll watch Bayer as well. We'll see if we get another day of moves there. That was about an hour before, I think, the market closed. We got confirmation of what they're trying to do with US authorities around Roundup. So there could be another day in that. Well, maybe not. BAE Systems could be in focus as well. Predicted slightly lower profit and sales growth for this year after a bumper 2025. They're sort of signalling a slightly steadier earnings momentum, according to our Bloomberg News team. So we'll watch out for that one. And there had been a focus on the side of the business that deals with Doge over in the United States, so cyber and intelligence. Morgan Stanley asking questions about whether that part of the business would be predictable and as positive as it has been going into the years ahead. So we'll look for any detail there. But watch BAE Systems. I think I've seen that will perhaps go higher at the start of trade. So
Glencore came out with earnings at the top of our hour as well, of course, just less than 2 weeks after that deal with Rio Tinto fell through. So there's a return of cash to shareholder story, certainly for investors from Glencore. There seems to be some pressure coming through in terms of the copper part of the business. The coal part of the business versus copper. Copper's performed very well for them. We've seen that with other miners, of course, but they do have exposure to coal, and there's been some softness there. So we're watching Glencore in the mining space as well.
We also, the oil price has held on to some of the losses of yesterday. So that was kind of a yesterday story, with the oil price dropping on the back of early conclusions from the Iran-US talks. But we'll see if that has any further impact on markets, certainly on London, as we get closer to the market open. Coming up on the opening trade, then, we will be back with the start of cash equities trading. Futures point a little higher this morning. This is Bloomberg. Welcome back, everybody. A few minutes to go then until the start of the cash equities trading session here in Europe. Let's cast our minds back to yesterday and to the session of yesterday, Tom. And I am convinced that there is some kind of metaphor involving a duck here that would be appropriate, because we started here in the US session and we ended pretty much there as well. We didn't go very far. So on the surface, everything looks kind of calm. And that's what you get from the index move of just a gain of 0.1% on the S&P. But under the surface, there's a lot of frantic paddling going on and a lot of rotation away from software into hardware. That's just one of the rotations. Out of the US into Europe, perhaps, as well, is another one. And we saw maybe some evidence of that yesterday. So European stocks outperforming the US yesterday, and Europe closed here. So you might think that doesn't leave much in the way of gains for Europe to look ahead to today, but we are expecting to go a little bit higher. So the FTSE 100 up by 0.3% on futures. DAX futures also higher. Euro Stoxx 50 futures then as a whole, Tom, up by around 0.2%. What are the individual stocks you're looking at?
Yeah, some of the individual names that are in focus. We've talked about the earnings coming through in the mining space from the likes of Glencore. BAE Systems in focus as well. Carrefour, interestingly, is going to be one stock to watch. Glencore, of course, coming in with earnings that at the top line came in slightly above the estimates, but there's some concern amongst some, at least, that the coal part of the business is underperforming. Copper has done well for them. BAE Systems looking at a more regular pace. They've seen some strength, of course, on the back of the spend around defence, but consulting in the US, maybe some cuts around Doge, is in focus as well. Glencore, and to what extent the return of cash to shareholders can be welcomed. Anna, as we think about the countdown to the open.
Yeah, absolutely. Just thinking about it. 12 seconds. We don't want to act too soon. 12 seconds to go then until the start of cash equity trading. As we've said a couple of times, we could be short of a little bit of volume on global markets because the US was closed on Monday, because it's Lunar New Year holiday in a lot of parts of the world, and so other markets are closed today. Let's have a look then at where we open up this morning. And in the very early stages of this trading day, we don't have a huge amount of movement to report. So the FTSE 100 500 is flat to positive, just up 0.1%. Stock 600 as a whole up by 0.2%. There wasn't a huge amount of basic resources movement when I was looking at the underlying copper prices, iron ore prices. They were sort of either side of the flat line, but maybe there's some movement around basic resources. We've had some corporate reporting out of the UK around Glencore and BAE Systems, as Tom, you were reporting. So maybe there's some interesting moves taking place there. The IBEX over in Spain up by 0.3%. The CAC 40 up by just 0.1%, and the DAX, as is its custom, yet to open. Tom, what do you see?
So the FTSE 100, given the record that we've seen yesterday posted for the FTSE 100, it's up about 6% year to date and building those gains today, so up 0.3%. Basic resources is the lift for the FTSE 100. That sector, as you were saying, Anna, is currently top of the list with gains of 2%. Banks are also gaining. They had a decent session yesterday. Currently, banks as a sector up 0.8%. Energy on the oil price moves that we're starting to see. And, of course, there was some optimism from both the sides, Iran and the US, on the back of those talks yesterday. Oil prices up, Brent up 0.3%, though, at 67.65. So energy as a sector is up 0.6. But the leading sector by some stretch so far is basic resources up 1.9%. On the downside, chemicals down 0.4. Media a little softer as well by 0.3%. Anna, what else are you seeing?
Yeah, well, I was lingering on that basic resources move because we do have some movement in silver and platinum, and both of those are up by more than 2%. But it's interesting, given the extent of the moves we've seen recently in those precious metals, these don't even stand out. I'm looking at the GMM screen, and they don't stand out as kind of outsized moves for these metals. Gold also up 1%, but perhaps it's the precious metal side of things that's pushing us higher. Copper prices just up by 0.7%. So in terms of the movers and where we are seeing the action coming from, yeah, we do have some of the diversified miners really moving higher, and some of the copper miners. So Antofagasta, Glencore, Fresnillo, precious metal side also moving a little bit higher. So Glencore well represented there on the Europe 50 performers. Let's get to Sophie Wynn, Portfolio Manager and Strategist at BNP Paribas Asset Management, with us on set this morning. Sophie, good morning to you. So we are kind of looking for some direction, I suppose. I mean, we found some to the upside this morning. Basic resources doing okay. That's kind of on the back of underlying commodity moves, but also earnings from the likes of Glencore. When you think about the year ahead, does the basic resources sector, does that look like a place you want to be because of build-outs of data centres and other things, cyclical rotation? Is that an area you want to focus on?
So in terms of allocating within the equity sector, we've been favouring hardware versus software for more than a year now. So being Korea, Taiwan, like semis, and Chinese equities. But I think from like a pure cyclical standpoint, if you look at the soft indicators, it's been pointing out towards some kind of recovery. So we've been long basic resources and oil equities in Europe since December, and it's been one of the top trades in the portfolio.
Yeah, OK, so this is not a new theme. This is just something that carries on.
Yeah.
We also see energy stocks doing pretty well this morning, up 0.9%. Do you put that in the same basket around the themes you mentioned, or is there something very different happening around the energy space?
I think it's twofold. So the first one is, you need basically more molecules in the portfolio versus everything software where it could be at risk from AI. But at the same time, I think there's this anticipation and well understood supply-demand dynamics where we all know that oil is in oversupply, 3.6 million barrels per day oversupply. But at the same time, if you look at WTI's Q, there's clearly some geopolitical risk premium that is going on, and it's acting as a portfolio hedge at the time when there's really some questions about duration.
Sophie, good morning. What did you see 12 months ago that made you convinced that you should go long hardware and short software?
So it's basically the fact that we didn't know where AI was going to start affecting the different sectors. I think in terms of hardware, we knew that there was going to be demand for memory. And at the same time, if you look at Korea, for example, it's been an equity market we've been long since May last year. And it's an equity market where domestic fundamentals, the change in corporate governance were also very attractive. So it's been really like green lights all on for some of the equity market that turned out to be as well as like on the hardware
So how long does that hardware versus software story continue for you?
So it's kind of like a hard question because there's some reluctance at this point to put like a zero terminal value. And you need to understand how long it's going to take for AI to start impacting all other sectors and have basically convince some of the equity analysts to start putting zero in terms of like their DCM. I don't think it's coming anytime soon.
Yeah.
But at the same time, I feel like you need more, at this point, more distinction between the AI winners and the AI losers.
Yeah.
But when you look at the domino effect throughout sectors, it feels like it's more entire sectors that are affected one after the other. So we started with India software, and then the banking sector, and then like the shipping companies. So I think you need the dust to settle. What could save us, I think, in terms of like the white collars is the fact that some companies could be a bit more inflexible and a bit slow in adopting AI.
Great, that's what we pin our hopes on ponderous decision making.
Yeah, everyone be really careful and slow.
Yeah.
But just to think about that though, I mean, attaching a zero terminal value, isn't that a bit extreme, Sophie? I mean, I don't know, I'm asking a genuine question. Is that like it being 2000 and looking out across the retail landscape and saying, I'm marking all bricks and mortar retailers to zero because they are now worth nothing, because everything will be bought on the internet? Is that a good parallel? Because that would have been, yes, of course, online retail has upended the high street, but we still have high streets and we still have some stores that make money. So, I mean, is that a good parallel, a useful parallel at all?
Yeah, I think it's at the extreme, as in, but at the same time, you don't want to go to the extreme, but at the same time, I think it's hard to basically know where the floor and valuation is going to be. So I think there's going to be some temptation to buy on dips, but at the same time, you wonder, well, the multiple expansion has been so huge since like GFC and even COVID. You just wonder where it's going to be. And if you talk about the retail sector, but I think the fact that there's so much consolidation across the board, I think what you could expect going forward is those companies that adopt AI early will win, but those that are a bit lagging, there's going to be much more M&A, much more consolidation, where you're going to have either the early adopters and super innovative companies, and then, like, I would say, the more entry-level ones.
But we had a really interesting story out the last couple of days about misclassifications of companies, or at least, you know, they've been classified as one thing and they could equally be considered software. So maybe a business that's been classified as business services, or because it serves the food industry, it's classified as food product, but actually it's a software business. I wonder, is the market ready to think about that level of complexity? It doesn't seem as if the market has the bandwidth for that right now.
I think not yet, because we're still waiting to see how much AI is going to start penetrating in the company. So for now, I feel like it's really some bifurcation on AI and non-AI, but at the same time, some entire sectors are being hit. So I think if you think about investing, it's hard to basically project in the future, but one thing you can basically get hold of is hold molecules, hold things that you can basically like have physically have like a sense of. So that's why basic resources, oil and metals are working versus like software, where do you really want to buy the dips here?
Where does that leave your regional bias then? Are you biased out of the US on the back of that view? Are you thinking Europe versus the US? I mean, clearly you've talked about the Asian trade play, in particular South Korea. But where's your regional bias at this point?
At this point, from the equity standpoint, I think we have Europe, but it's more basic resources and oil. But yeah, we have this bias towards Asia, so Korea, semis, China, so A and H shares. But we think that you need to be really opportunistic. And the fact that the world is less correlated to the dollar, it gives you a bit more encouragement to focus on fundamentals rather than anticipate the next move on the geopolitical side, which is kind of reassuring.
OK, Sophie Hyun, thank you very much indeed. Sophie Wynn, Portfolio Manager and Strategist at BNP Paribas Asset Management. Appreciate your insights today as we look at European stocks across the benchmark, up 0.5%. Let's look at the core 6 names right now. And Sophie making the case for exposure to the molecules, to the hardware story, and having been short software, at least in the last 12 months. Checking in then on Rheinmetall in the defence space. Interestingly, we saw a little bit of pressure on some of the defence names yesterday. Today, Rheinmetall is up 2.8%. ASML within the tech hardware piece is up 0.4%, as you can see. Schneider Electric gaining. Another standout, it seems, is Novo Nordisk, which had a strong session yesterday. Healthcare was one of the key sectors on the upside yesterday. Novo up 0.6%. But the standout right now is defence and Rheinmetall up 2.8%. Let's check in on some of the other individual stocks on the move and bring in Chloe Mellet. Chloe.
Good morning, Tom. Glencore is actually up this morning, despite the fact that profit did fall in 2025. That was because the record prices in copper that we saw were not enough to offset some of the weakness in the coal business. But it seems that perhaps shareholders are focusing instead on that $2 billion in shareholder returns that Glencore has promised. And so we are up about 2.3% for Glencore this morning. Another London-listed name that is doing well is BAE Systems, which is up, that defense company, up almost 6% this morning. The earnings were positive, and the guidance seems to signal that momentum will be stabilizing after a really, really good 2025 for this year. And so this is seen as this is being taken very well by the market, and we are up quite strongly for that defense company here this morning. Moving on to Carrefour, which is not doing so well. We're down about 4.8% after the profit missed expectations, and now the focus is going to be on the Capital Markets Day that is being held today, and where Carrefour is expected to update the market on the plan to refocus on Spain, Brazil and France. So those are the core markets, and shrink operations elsewhere. So we'll see if we get a reversal as the company outlines some of those midterm ambitions. Moving on to Pasky and Mediobanca, they're both up, both in the green this morning after Pasky's board approved a plan to fully integrate Mediobanca and proceed with the delisting of those shares. And so this is very positive this morning, and Mediobanca in particular up almost 8% this morning. And finally, over in Spain, we've got the luxury goods and perfume company Puig, which is up 6% after revenue that beat estimates. And so the company is also very confident for the year ahead. And so we are up quite strongly this morning for that company.
Thanks very much, Chloe. Chloe Mellet with the stocks that are moving, and one of those was Glencore, of course. And so coming up on the programme, Glencore posting a drop in full-year profits amid declining earnings from coal. We'll dig into the details of that next. This is Bloomberg.
Welcome back to the opening trade. Happy Wednesday. We are 16 minutes into today's session. A pretty decent session, actually, for European stocks. Across the benchmark stock 600, gains of 0.5%. The FTSE 100 building on the record that it posted yesterday, up 0.4%. And part of that is down to the basic resources story. That is the top sector right now, outperforming all others with gains of 1.5%. And on that basic resources story, but with some granular detail, Glencore shares up this morning as well within that basket, despite posting a drop in full-year profit as record copper prices failed to offset declining earnings from its sprawling coal operations. The company reporting core earnings of $13.5 billion, 6% lower than the previous year. But as we've noted, the stock is up 2.2% so far in the session. Let's bring in Bloomberg's Commodities and Energy EMEA Managing Editor Liesl Hill. Liesl, talk us through the Glencore earnings then. What stood out to you and the team?
Yep, so we've seen this kind of tale of two stories for Glencore. On the one hand, the copper price, as you mentioned, has been really strong. They've really benefited from that over the course of last year. And at the same time, in the second half of last year, Glencore had this rebound in their own copper production. So that's that created quite a strong tailwind, of course, from the earnings. But then on the other hand, the coal business, which Glencore is a huge coal producer in both metallurgical coal and power coal, and that has been really their big profit driver in recent years. It's resulted in these huge returns that they'd been paying out to shareholders in the past few years, and yet we've seen this big drop in the coal price last year. Both types of coal dropped by roughly a fifth over the course of 2025, and so that's been this drag on earnings, and we saw, as you said, we saw earnings drop by 6%. But I think probably what investors perhaps are focusing on is this $2 billion that the companies announced that they're returning. They just have an equation that they calculate returns to shareholders, but they've also announced this $800 million top-up. Okay. Which I think the market is applauding this morning.
Okay, so the market likes to get the money back. But what about the M&A story within the mining sector? Because for recent weeks, the story around Glencore had been about whether it was going to be in a deal with Rio Tinto, and then that that faded. Liesl, do we go back to that narrative?
Yeah, that's right. And again, it's like the whole of the mining industry, it seems, at the moment. The story really is a copper story. So that was the driver, as we've reported, behind Rio's interest in Glencore. Glencore's got a strong portfolio of copper mines, although they have been under a bit of pressure, we reported last year, from shareholders in terms of sort of laying out their growth strategy in copper. They've faced some criticism for their track record as an operator of mines, and they've taken pains to emphasize this morning that they met their production guidance for the second consecutive year for their key commodities, and as we said, the copper production rebounded quite strongly, so I think they're quite proud of that. In December last year, the company announced, or the management laid out their strategy for their their copper strategy, copper production. They've laid out a plan for how they plan to get to 1 million tons a year of copper by 2018, and that was something that investors really responded quite strongly to. The shares responded at the time, and then we've seen, as you said, Rio Tinto coming in. So about a little over a month ago, there was the news that they'd resumed their talks. They were in negotiations. Obviously, the UK takeover rules mean that they had a month to either reach a deal or get close to a deal to extend the deadline, or for Rio Tinto to walk away. And it was quite dramatic. Over the course of sort of 24 hours, it all kind of seemed to fall apart. And at the end, the two companies were unable to reach an agreement on valuation. Yeah. Of course, that's not to say that the talks couldn't resume. There is a lot of buzz around the mining industry, certainly around M&A. We've seen Anglo and Teck successfully get done. We've seen a bunch of things attempted to happen, including this one. So it does seem that story isn't over yet.
And as you say, a lot of this is about building out copper assets. If you take a step back, then what are the dynamics you're seeing when it comes to copper, the demand-supply story right now?
Yeah, so it's an interesting one. Certainly in the kind of medium to longer term, there is a strong expectation from mining executives and people in the industry that copper is going to be constrained. Obviously, it's a big part of the electrification story, and there are only so many mines and there are only so many copper deposits. Right now, it's a bit more of a complicated situation where we've seen this big suck of copper across the world into the US because of expectations that Donald Trump might come back to the idea of tariffs on refined copper. So that flow has really continued in recent months. And as a result, the rest of the world has been left a little tighter. In terms of demand, it's a bit more of a complicated situation. Buyers have responded to the high prices by pulling back. Chinese demand wasn't particularly strong, even going into this latest surge in prices. And so we have seen, in fact, in the last few weeks, there's been a bit of a build in stocks that we've been able to see on the London Metal Exchange, and prices have been showing a bit more weakness.
Liesl, thank you very much. Thanks for joining us. Great to get your analysis. Bloomberg's Commodities and Energy EMEA Managing Editor, Liesl Hill. Let's pivot from that corporate story and the metals story to what's going on in central banking, because the Financial Times is reporting that Christine Lagarde is expected to leave the ECB before her 8-year term as president expires in October of next year. Now, the ECB has responded to this report, saying that President Lagarde is totally focused on her mission and has not taken any decision regarding the end of her term. This is what she told Bloomberg in a recent episode of Leaders with Francine Lacroix.
It was a challenge. It was Europe. I was always under the impression that it was a 5-year term, and I hadn't checked. So having said yes to Macron and Merkel, I said, oh, OK, well, I'll be in Frankfurt for 5 years. And at that point, Macron said, no, for 8 years. But it was too late.
That's really interesting insight, and a reminder to everybody to read the small print. Bloomberg's ECB editor Jana Randau joins us now with some analysis. So, Jana, really interesting, this conversation, isn't it? Your team had some reporting earlier on this week talking about the rationale for why she might go early. Even if she has decided to go early, maybe it's not in the ECB's interest to come out and say so. I mean, what is the latest thinking as to whether she stays to the end of the 8-year term?
I mean, that is for her to say, right? When I look at the lay of the land, when I look at what our reporting has thrown up, and most importantly the statement the ECB put out this morning, then it makes me wonder really hard whether there's anything to it. And right now, I have to say I'm leaning to yes, because the ECB says, she hasn't put any thought to the end of her term. Or she hasn't taken a decision, rather, about ending her term, which suggests to me she's at least considering it. And the arguments indeed are there. The latest episode of all that speculation started last week when the Banque de France governor, François Villeroy de Galhau, announced his resignation. He's leaving the bank in June already, prematurely. He says for personal reasons, but of course that gives an opportunity to French President Emmanuel Macron to announce or appoint a successor before he himself is leaving office next spring when presidential elections are being held in France. And of course, with the far right riding high in polls, there is speculation, shall we, in a way, far right proof the ECB, take that decision early, make sure the Marine Le Pen or Bardella, her protege, will not get a chance to be part of that decision. So a lot of loose ends there, but not so much a firm denial from the ECB or the president, from Christine Lagarde. So, this is something that we will obviously follow very, very closely today in the days ahead, and I'm very curious about the answer.
And as we await that answer, there is going to be that speculation, isn't there, about who could be in line to succeed Christine Lagarde. Who's on the short list at this point, Jana?
Interesting question. I mean, obviously, with everything being fast-tracked, we're left with the people that have come out so far. There's always been Klaas Knot, the former governor of the Dutch Central Bank, and Pablo Hernández de Cos, the former governor of the Spanish Central Bank, who is now running the BIS in Basel as managing director. And those two candidates, obviously both very well regarded in central banking circles, in European policymaker circles. Those are the front runners, I would say. There is Bundesbank President Joachim Nagel as well, who sort of threw his hat in the ring there, saying anybody on the governing council of the ECB should be, in principle, be able to do that job, which I take as an application on his part. Isabel Schnabel, the German member of the ECB Executive Board, had also said in an interview with us actually a couple of months ago that if asked, she'd be ready to serve. So that is the group of people that is being talked about, that has come out and said they would be interested. I'm sure there will be more. Lagarde came out of nowhere when she won the job. Nobody had her on their tip sheets, I remember. So I'm sure that that we will know a few more names. But for now, I would say Klaas Knot, Pablo Hernández de Cos, Joachim Nagel to some extent.
Okay. Jana, fantastic update on this evolving story. Well, you and the team will continue to monitor for us. ECB editor Jana Randa in Berlin. Jana, thank you. You can catch the full episode of Leaders with Francine Lacroix, where she speaks with Christine Lagarde on Bloomberg's new video hub. Check out bloomberg.com/videos for that episode.
Still ahead, some of the biggest names in tech are in New Delhi this week for the ongoing Indian AI Summit, including Mistral AI CEO. Our interview with Arthur Mensch is coming up. This is Bloomberg. Welcome back, everybody. This is the opening trade. Middle of the week, it's Wednesday, 30 minutes into our European session. And we have some decent gains, really, across European equity markets. The Stoxx Europe 600 up by around 0.5%. Some of that positivity coming through in the UK market with the FTSE 100 up by 0.5%, and in the German market with the DAX up by 0.5%. We've got defence names doing pretty well. That's on the back of the BAE numbers. So that's one area where we see some positivity. We also see mining names doing okay. We talked about this with Liesl Hill from the Bloomberg News team earlier on. Glencore results pushing that sector higher, the basic resources sector. So all of that plays well for the DAX and for the FTSE. The CAC 40 perhaps weighed down a little bit by what we see from Carrefour, which is a weaker story. And so that particular market just up by 0.3%. Tom, what do you see under the hood?
Yeah, here's the split then when we lift the lid on the Stoxx 600. So 326 names are gaining. On the downside, 257. So weighted in favour of those on the upside. In terms of volumes, not surprising to see the volumes versus their 20-day average are lower by 14, close to 15%, given, of course, the lack of activity in China, the holiday there, and the US just coming back, of course, after President's Day. So volumes are thinner. In terms of some of the individual names, touching on the broad contours of what Anna was saying as well, in terms of the defence play, BAE Systems is a strong outperformer, and as Anna was saying, you're seeing the likes of Rheinmetall being lifted as well. But BAE Systems on the back of earnings, really pleasing investors then, up 4.4%. Stromon Holdings is up close to 4 points, up 4%. And Glencore in the mining space then, yes, it is that copper story that's playing out for Glencore, and it's the return of cash to shareholders that seems to be lifting the stock price today. So claiming almost 3% on Glencore. On the downside, let's flip the board and have a look at EssilorLuxottica. Really interesting, given the relationship with Meta really kind of leading in terms of the AI hardware integration, even as they lag when it comes to the models. But now there's potentially a challenge from Apple, which is going to be coming out, according to reports, with some more AI hardware devices. So maybe that's part of the story in terms of the downside for EssilorLuxottica. Currently down 2.8%. They make those glasses with Meta that have that AI integration. Bayer dropping almost 7% on potentially a $7 billion payout relating to the Roundup weed killer story. So that's coming out as well, and that's weighing on the Bayer stock today. Unilever downgraded, down 0.7%, down 36 points. For Unilever, Anna, what else do we need to look at?
Yeah, let's get an update on some of the other big stories we're covering this morning. The Ukrainian President Volodymyr Zelensky says his country's negotiators will discuss the future of the Zaporizhzhia nuclear power plant during today's peace talks, which take place in Geneva. The Ukrainian leader also said the third round of the US brokered talks with Russia would cover the monitoring of any ceasefire and Moscow's territorial demands. Reform UK's new Treasury spokesman, that's Robert Jenrick, is set to say that the party plans to overhaul the Bank of England and the government's budget watchdog if it wins power. The Bank of England would be stripped of ancillary responsibilities such as net zero so that it can focus on keeping inflation down. Jenrick is also expected to confirm that both the BOE and the OBR will remain independent under a reform government. Some software firms, including McAfee, have released their earnings ahead of schedule in a bid to convince lenders of their resilience to disruption from artificial intelligence. The software industry has faced a seismic shift as the rapid advance of AI threatens to turn swathes of corporate debt into a burden. And so, Tom, this means some of these private companies lifting the lid on their earnings stories, on their revenue streams, trying to convince their creditors that business is still good.
Yeah, trying to make the case that they can still remain resilient and relevant in this AI-disrupted world. We get an interesting voice on that story right now because some of the biggest names in tech are in New Delhi for the ongoing Indian AI Summit, including the CEO of Mistral AI, Arthur Mensch, speaking to Bloomberg about the opportunities for India's tech sector as the global race for AI dominance heats up.
They absolutely have the skills. They have the skills everywhere on the stack. So what we see is that on the infrastructure side, India has taken a strong stance on sovereignty. And so that's a place where we can play an important role because the platform we bring is something that every state we work with can actually customize. So in that respect, I believe there are a lot of synergies in between what we can provide and what India already has. They have taken some step in training models themselves as well. Again, this is a place where the open source model that we can provide can play a role because they can be used as a basis to make models better at certain languages. This is something that we actively do with certain states, that we've done with Singapore, that we are doing with Morocco. We've released a model last year called Mistral AI, which is specifically good at Indian languages in text. And so that's something that we can improve through partnerships with Indian companies that have access to more data. The audio models that we've released, Voxtral in particular, is very strong at Indian language. We see audio as a big way in which the consumer market in India engage with technology. And so, again, that's a place where partnerships can actually take us much further because we can provide the technology and the training stack and the GPUs and the people that know how to train models. But what we could benefit from and what we could partner on is access to data, access to the consumer market so that we can make that technology better and put it in the hands of, for instance, the Indian government.
The framing right now in AI is that race between the US and China. Where does India fit in?
Well, I think it's the wrong framing. I think the right framing is really in between centralized technology with closed source models and decentralized technology with open source models. And there, I would say Europe and China are playing a role, and we are I'd say, competing or collaborating, you can say, with other labs that are releasing open source models and building on top of each other. So I'd say the way India should probably look at this problem is that it's a safer bet to bet on open source technology, because they will have ability to customize the models that are open source to the cultural nuances of India, ability to deploy them on local infrastructure, then potentially on the edge as well when it comes to deploying it on mobile phones. And so betting on open source is something that Europe is doing actively and heavily. It's something that India can actually do to its benefit.
And you think the India model can be a template for the global south?
Well, I would say yes. We do work with countries that are taking similar bets, like Morocco is betting on open source to serve their citizens, the Moroccan state, Moroccan companies as well. And so betting on open source technology to customize it and to deploy it on local infrastructure is something that is extremely relevant in Europe, extremely relevant in Singapore, extremely relevant in India, in Africa. And is it a template for the global south? I don't know. It should be a template for the world, really.
I want to talk about what we're seeing right now. Given the AI boom, we're seeing a deepening shortage of chips, and the likes of Elon Musk and Tim Cook have come out to say that it will impact all technologies, all production. What's your take on that?
It is true, we see some shortage in DRAM and in hard drives as well. That is starting to have an impact on the market. We have secured supply, so we are not worried on our side, but it's certainly driving the prices up. And again, it also means that companies and states should think about procurement of their hardware and technology in a closer way, because the problem that they may run into is that if very big companies are acquiring all of the chips or all of the memory or all of the hard drives, then suddenly the small players will have less access to the market and they will suffer from a price hike. So we try to make sure that this is not the case for us, and so for this we're very confident. And we also work with our customers that wants to deploy on-prem, for instance, to make sure that they think about the problem relatively early.
Do you think the chip crisis is about to get worse from here?
I don't know. I think we see that upstream of us, there are some investment on new fabs, for instance, but effectively that's going to take some time. But yeah, it's definitely affecting the market, and we look at the supply chain as a whole. So not only do we look at the servers that we buy, but we also look at the chips, at the memory, at the hard drives. So we're really going deep down the procurement stack to make sure that on the supply side we are actually not bottlenecked.
That was Arthur Munch, CEO of Mistral AI at the AI or India AI Impact Summit. Meanwhile, AI is, of course, upsetting numerous industries from banking to the legal sector, but one where it could be beneficial is gaming. That, of course, is the view of the CEO of Supercell, a Finnish games company whose titles include Clash Royale, Boom Beach and Heyday. Co-founder and CEO Ilkka Paananen joins us now. Ilkka, good morning. We want to get into your results, of course, and thank you for your time, Ilkka. I do want to start on the AI disruption story with a particular lens on your industry, the gaming sector. Given what we've seen in terms of the developments around world models and generative AI and what it's doing to coding, what is your view, Ilkka, as to what your industry looks like in, say, 2 years' time as a result of generative AI and the evolution that we're seeing?
Well, thank you very much for having me, Tom. We are incredibly excited about AI for two reasons. The first one is that we believe that AI will give our developers, our creative people, superpowers that they didn't have before the age of AI. So quite simply, they can do more, they can do better for players and essentially create better games. So that's one thing. The other thing that we are excited about is that, what are the type of games that we can't even imagine today that will be enabled by AI? Like, what are these new forms of gameplay that will emerge?
And this, interestingly, Ilkka, you're adding headcount, you're adding developers, whilst many in the industry are cutting. Why is that? What is giving you the confidence to add headcount?
Yeah, you're right. Last year, we actually hired more people than we had hired ever before. So we are growing really, really fast in terms of headcount. And that's actually maybe, I mean, obviously the financial results last year were incredible. I'm very proud of them. But I'm even more proud of like where our companies, in terms of people, teams, and culture. I believe that the culture and the teams are kind of strongest that they've ever been. But what really gives me the confidence is that I just find I'm a huge believer in kind of human creativity, and I think the AI will just boost it to incredibly high levels, and just simply feels that we can. This is we are almost in this kind of golden age of innovation, and AI of course will be one of those enablers. But at the front and center are these humans, these amazing creative people who can do, as I said, they can just create better experiences for our players than they could have ever before.
So, good morning to you, Ilkka. So you see AI as giving your staff a superpower, really enabling them rather than making people less relevant. Do you think the conversation around AI focuses too much on the latter and should focus more on the former, on the superpowers it can give to white-collar workers?
Well, I think it's a balance, and obviously, at any given point of time, there's this kind of transformative technology such as AI emerges. It both creates a lot of new opportunities, like the opportunities that I just spoke about, but then we also have to look at the other side of the picture. But of course, we and I are in a very fortunate position that I actually believe it's going to be a huge opportunity for gaming as an industry. But I totally get the concern in some of the other industries, of course.
Yes, I wonder if an AI-empowered world will be a world with more leisure time. Maybe that's good for gaming. But on the hiring story, I mean, Tom was asking you about your hiring strategy. Just give us some insight into the extent to which you're recruiting graduates and people from out of university or young people, because that seems to be an area of concern that perhaps businesses won't necessarily need that younger talent because a lot of the jobs they were previously doing can be done by AI. What's your experience there?
Well, it's a fantastic question, and actually something that we speak about a lot. And for us, it's actually really, really important to bring sort of like this fresh new graduates, fresh new ideas into the company. And of course, if you think about the business we are in, obviously we create games for the broadest possible audience, but big part of that audience are of course teenagers and the youth in general. So therefore, it's important that we have people who actually are part of that world and who live in that world. And then it actually is important for that we have these younger creative people in the company, because they kind of bring us a kind of perspectives that we would never think about.
Ilkka, on the earnings story for you, so that's the hiring piece, which was really interesting and really interesting context. So revenue's down, 4% in 2025, but that was after a record year in 2024. If we take a step back, Ilkka, at the broader gaming industry, the mobile gaming industry, it seems to be maturing. Acquisition costs are a bit higher. Getting those hits seems to be a little bit more difficult. Is this an inflection point for the mobile gaming industry?
I think it actually is. I feel that the industry is at the crossroads. So if you look at the last sort of 3 to 5 years, we basically, the mobile games industry has grown on a lower single digits, on an annual basis, and that doesn't really feel like a growth industry to me. And then the question is why is that? And I think it feels to me that what the industry has been really good at is that sort of optimization and making the existing games better. And there's nothing wrong about that. I mean, of course, we want to, and we owe it to the players to make these existing games better. But what hasn't happened is that we haven't really seen this new wave of innovation, new types of games emerging in a long time in the industry. So what I'm sort of looking for is the next sort of what I would call say Pokemon Go moment, or say Clash Royale moment, that a studio introduces something completely new to the market.
Yes, and thinking about where the direction of the company goes, Ilkka, I know Tencent now one of your shareholders. Are they happy with where the business is going? They're being more active, we understand, with the companies they own. Where are they pushing you to go next?
Well, I mean, they are very fortunate to have a company like Tencent as a kind of major shareholder. So, they are probably the most patient, long-term thinking shareholder you could imagine. So I wouldn't say that they're pushing us to go anywhere. I mean, if there's any push, it's towards more innovation, just creating better games for our players.
Okay, Ilkka, thank you very much. Ilkka Parnanen, the co-founder and CEO of Supercell. We thank you very much for your time. Coming up on the programme, Warren Buffett cuts his stake in Amazon by more than 75%. Find out what he is invested in instead. That story is next. This is Bloomberg. Welcome back to the opening trade. Now, Warren Buffett's Berkshire Hathaway has cut its stake in Amazon while buying shares in the New York Times. There you go. We answered that question for you. For more on the company's 13F filings, what they tell us, we're joined now by our markets reporter, Abir Abu Omar, with details. Abir, good morning to you. So tell us a bit more about what Berkshire Hathaway has been up to.
Selling Amazon, Anna. So yes, they have sold Amazon. They've reduced their stake in Amazon by more than 75%. Now that brings the total shares to 2.3 million shares that Berkshire Hathaway now owns. Now instead of Amazon, not at the same quantity, but instead of Amazon, what Berkshire Hathaway has purchased is New York Times, as a matter of fact. So that's a bid into media. And they've been going through these deals over the past quarters. I mean, one big deal that Berkshire Hathaway has shown interest in is Occidental for about $10 billion, that is, a couple of months ago. And then we also know that they've increased their stake in Alphabet to $5.6 billion. So, these are some of the things that Berkshire Hathaway has done over the last quarter. Things have changed in the market, obviously, since, but Amazon is the big name that Berkshire has sold.
What are some of the macro trends we can tease out of these 13F filings?
Yeah, Tom. So three main things that I was looking at this morning when I came in, and that is, one, we're seeing money moving out of tech, we're seeing money moving out of discretionary services, and we're seeing money coming into healthcare. AstraZeneca is actually one of the biggest beneficiaries out of this money moving into healthcare. Now, again, these are, the 13F filings are for the fourth quarter, so we've seen so much happen in the market since then. AI disruption, we've seen the rally in gold and metals, but as of the end of last year, we've seen those big moves. The Max 7 stocks, some of them benefited from this rotation out of tech, some of them did not, but we know that net Tesla, Apple, Microsoft and Nvidia have net buying positions.
Okay. Bloomberg's Abu Omar on those 13F filings and what we can read into them. Abir, thank you very much indeed. There's plenty more on the agenda for today as well. Joining us for a take on these markets, but let's get you up to speed on terms of what else is coming through before we get another take on the markets is... This is interesting. We've heard some voices already from the India AI Impact Summit. We were hearing from the CEO of Mistral there. We'll expect to get other names as well. All the big leaders, essentially, in AI and tech are at that event. You've got the Geneva talks continuing in terms of the conversations between Russia and Ukraine. Earnings from Euronext. And we're going to hear some Fed speak with Michelle Bowman up, and also the Fed minutes as well. Let's bring in our Markets Today editor, Emmanuel. Emmanuel, talking about Fed speak, and we had a number of names yesterday, or at least two names, talking about the impact of AI on the labour market and productivity and where the neutral rate could be, and seemingly diverging from Kevin Warsh, who, of course, could be the next head of the Fed. What do we take from the kind of the Fed speak? What have we learned?
Yeah, so it is quite interesting. We had Barr saying in a speech yesterday that he doesn't think that AI will necessarily result in lower inflation, that it wouldn't necessarily, therefore, support the case for more Fed rate cuts. Now, that is the opposite to what the administration and what Kevin Warsh have been suggesting. Barr's argument is that the sort of capital required to invest in the technology will actually potentially add to inflation. So that, I think, is particularly weighing slightly on yields this morning. Weighing on treasuries and pushing up yields slightly this morning. We are seeing a bit of uncertainty, I suppose, in how AI plays out. And that really is what we're seeing across all industries and asset classes. There's this sort of, is it going to, support growth, but then is it going to be inflationary or not? And it's very difficult to tell, but it depends how it impacts consumers as well, and sentiment and what people do with their money. So it's a very complex picture.
Yeah, absolutely. We seem to be at the foothills of understanding all of that, aren't we, Morena? So we're going to get minutes from the Fed a little bit later on, so we'll no doubt be passing that tomorrow to the extent that it's all still relevant and useful. Let's talk about the UK then, because you spent a lot of time looking at UK assets, and we've had 2 days' worth of data. Overall, has it cemented the view that we'll get cuts from the Bank of England this week? How has the inflation data gone down today?
Absolutely. It has cemented, I think, the case for a spring rate cut. What today's data hasn't done is moved the needle really any further than yesterday's labour data, which was a lot more benign than expected, and that really did see traders ramping up bets on interest rate cuts for April being almost fully priced in, and looking increasingly likely for March, which is the next meeting that we're going to have. Today's data was sort of expected to be the big critical one, and I suppose it feels like it's fallen a bit flat because essentially inflation had cooled, but it was expected to. In fact, the reading was very much in line with expectations on the top line. There were a few areas where it was a tiny bit higher, but some of those, when you look at the overall pattern and the mechanics, were expected. It really supports the picture of a disinflationary trajectory going forward. So very much supports what the market was already pricing in. Hasn't really changed that much today. But this week, we certainly have seen expectations firming up that we will have a cut by April, if not in March.
Yeah, on the one hand, you've got the services story where we've got some quite resilient inflation dynamics in the UK, it seems. But on the other hand, we've got what the government is doing to bring down those sort of regulated prices. And so a lot of people talking about, 2.1% inflation by maybe April. Morena, thank you very much. Thanks for joining us. Morena Coniam, Bloomberg Markets Today editor. Let's stick with the UK and talk UK tech, which is not something we do in terms of listed companies.
Did you just say
often.
UK tech?
Yes, I did say UK tech. It's Raspberry Pi. Let's talk about Raspberry Pi, because another day of strong gains. It's up another 22%, Tom.
Yeah.
Yesterday it was up more than 30%, and all of this on the back of somebody's idea that this might be useful when running agents.
And to be clear, there is a lot of amazing UK tech. It's just not very much of it is publicly listed. So that's why we're obsessed with what's happening with Raspberry Pi. So up another 22%. And look, this is about, we've been discussing this is about the fact that the bull case for this stock right now is that there's going to be massive demand for people who want to use these agents like OpenClaw in a more secure setting, away from their home desktop. You put it onto Raspberry Pi, there are some security risks, you run it on there, and it's a cleaner place. So that seems to be lifting the sentiment, or certainly is lifting the sentiment of Raspberry. Another incredibly strong day for that stock.
Another strong day. We will be hearing from Jim Zelter, the president of Apollo Global Management. That's on surveillance, midday London time. No doubt thoughts on the tech themes that we've been discussing. This is Bloomberg.